Hi, I'm Sarah Benwell, the editor of fundoperator.com, and I'm here with Kevin Mahn, President and Chief Investment Officer at Hennion Walsh Asset Management. Kevin will be speaking at our Fund Operator North America conference in October this year. So ahead of that, we wanted to catch up with him to get a sense of what he'll be talking about. So Kevin, your session is about the increased criticality of fund allocations. And my first question is, what impact is national inflation having on fund operators?
It's a great question, Sarah. And we largely agree with the view of the Federal Reserve on inflation right now. That from the standpoint that the spike in inflation that we saw in April and May is likely transitory in nature, but increased inflationary pressures are likely to stay in place for the next 1 to 2 years at a minimum as the Fed tries to reflate the US economy from the depths of the recession that it reached during the peak of the COVID-19 pandemic. Just consider this, Sarah. In the month of April alone, if you look at CPI, there were 3 components of CPI that accounted for over half of the rise in inflation that we saw that month. Those 3 factors were airfare, lodging, and used vehicle prices. Clearly, those are all related to the increase in demand for goods and services of everybody now that's vaccinated and comfortable going out again, and also supply chain related issues related to semiconductors impacting new vehicle prices. So we think those pressures start to subside as we get through these summer months, but inflation is here to stay, and investors are wise to position their portfolios accordingly.
Brilliant, that makes perfect sense. And what are some of the consequences of under-allocation of international stocks on investment portfolios?
Yeah, so interestingly enough, the research that we did, we looked at previous periods of inflation, and what we saw was that the best performing asset class wasn't necessarily commodities, wasn't just gold, but rather was equity, specifically emerging market equities. And what we found is that a lot of investors have a home country bias. They invest in what they know and where they reside. As a result of doing so, you lose out on some of the potential diversification benefits of investing across the globe. And as we'll likely see in the next decade or so, some upside growth potentials that exists overseas as well.
Lovely. And you mentioned, people going for what they know. What are some of the other typical barriers that are preventing fund operators from allocating internationally?
Yeah, I think it's a lack of confidence in terms of how to invest internationally. As we know, there are different types of geographic breakdowns overseas, whether they're international developed markets, such as those in Europe, international emerging markets, the likes of China or India or Brazil, or even international frontier markets, or as I like to call them, the emerging markets. There's a lot of different nuances with respect to cultures, the way those economies operate, the underlying currencies, and also which countries, which companies, which industries to pick. So I think that leads to a lot of apprehension and the likelihood of investors just sticking to that home country bias.
Got it. And how can fund operators overcome some of these barriers? What are the main things that they should be thinking about?
Yeah, we're very fortunate here at Hennion Walsh through our Smart Trust UIT business to work with Dorsey Wright. With our Dorsey Wright International Momentum Trust, Dorsey Wright actually allocates to some combination of 50 different companies in international developed, emerging, and frontier markets based upon relative strength or momentum-based criteria. I think investors would be wise to consider using UITs or exchange-traded funds that provide them with broad, diversified access to those different markets so that they don't have to do the individual company analysis, or they don't have to worry about potential currency implications. Having a US dollar-based diversified portfolio that's selected for them, I think would be worthy of consideration.
Brilliant, lovely. Thank you so much. That's been really great. I can't wait to hear more from you later this year. Thank you.
I'm looking forward to it as well.